In this video clip, I am going to do an analysis using WarpPLS that will allow me to find out what among three main factors influences the price of Bitcoin. I will do this by grouping some financial instruments into other variables, which are they are generally referred to as latent variables. They are actually composites in this case, and I will make them point into Bitcoin. In order to make it easy for investors to perhaps use the results of this analysis and understand what's going on, what I'm going to use is data from ETFs that track different things. So GBTC tracks the price of Bitcoin, and it's an ETF, exchange traded fund that investors can purchase through retail investing software tools, websites such as E-Trade, Schwab, Fidelity, and others. GLD tracks the price of gold. IAT tracks the price of regional banks. QQQ tracks the price of companies that usually make up the NASDAQ. SLV tracks the price of silver. SPY tracks the price of the S&P 500. TLT tracks the price of treasuries, long-term treasuries. And XLF tracks the price of financials. That includes investment banks such as Goldman Sachs, JP Morgan, and others. So what I'm going to do is I will read this this data into WarpPLS, into a WarpPLS project file. So okay, I read my data into WarpPLS, and now I'm going to create a model. So if I want to see the data that was read into WarpPLS, I can go to this option, and here's the data that I have. By the way, this data was collected, it actually tracks the price, the daily closing price of each one of these ETFs, and this data is daily, so it's a closing price for the day, and it has been collected for every day since the beginning of 2019 to early 2020. So I'm going to create my model, and my main dependent variable will be GBTC, or the price of Bitcoin. And I'll create another latent variable, which will be a hedge, which will combine financial instruments that are typically used as hedges against drops in the market. So I will use gold, silver, and treasuries. I'll create another latent variable which will track financial institutions, and that will combine IAT, regional banks, and large financial institutions. Now create another variable which will track the market, and it will be a combination QQQ and S&P 500, QQQ being NASDAQ, and S&P 500 being tracked by the SPY ETF. So I have these variables. So what I'm going to do now is I'm going to create links between each one of these possible predictors and the price of Bitcoin. I will save this model. I will make sure that this analysis is linear to simplify the interpretation of the results. I'll save my settings. I'll keep this PLS regression as the algorithm that groups those indicators into the latent variables. And then I will run my analysis. Here are my results. So what these results are telling me is that when the effects of these three variables on Bitcoin are considered and controlled for one another, I can see that Bitcoin is much more strongly associated with hedge than with financials and market, and that the association with these two is relatively small compared to this one, but positive. So this tells me that since 2019 till early 2020, Bitcoin has primarily been used by investors as a hedge, and this may continue for the future. It has not been seen by investors as a replacement of financial institutions, which was more or less what Bitcoin was seen early in its introduction as something that could obviate the need for financial institutions such as banks and even credit card companies. So it's positively associated with growth of financial institutions, and it's positively associated with the market, and these two are probably strongly correlated. So this tells me that Bitcoin is indeed a hedge and has been perceived by investors as a hedge, but it's positively associated with the stock market and with financial institutions. So it's not really a replacement for this, and it's not a very effective hedge against market drops. Otherwise, this number here would be negative. So for the future, investors that are interested in benefiting from appreciation in the price of Bitcoin should consider this, that Bitcoin should move more or less in concert with gold, silver, and treasuries, but it will also move more or less in concert with the market as a whole and with the financial institutions. So it could be seen as a hedge that will do well in nervous bull markets. And this concludes this demo.